Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for October 16th, 2010. Okay, I'm going to put myself out there. I'm going to say that I think the market has probably hit a top this week, simply because there are a lot of things that are showing up as far as indicators that kind of clue you in that the market is pretty exhausted, and that there's a very good chance, as I mentioned, that we pretty much hit a top this week. The first thing, of course, you look at the stochastic, very overbought stochastic, but then again, we've been pretty overbought already. But nonetheless, you combine that with some pretty major MACD divergence. As I mentioned, overbought stochastic, MACD divergence. You can see some relative weakness here in terms of momentum as far as this leg higher. It produced a weaker peak right there. In addition to that, you can see that prices are very stretched out, very far away from the moving averages, very similar to what happened this prior April high. Almost the same type of indicators. You have overbought stochastic, you have MACD divergence, and you have some pretty stretched out moving averages. So you combine everything together, and you have the same setup, same recipe for a market top, or a very likely chance of a market top occurring right around here. The first level of pullback, if we do actually get that pullback, I would look for the 1115 level as that first level as far as support is concerned. Now, of course, if the market breaks above Wednesday's high, then of course there's a very good chance we can probably retest this April high. So never rule that out. Always remain nimble despite all the different clues that are stacking against a bullish market. Always remain nimble that there's still a possibility that this market can continue higher. Okay, and if it does, then the next level of resistance is obviously here. But as I mentioned, there's more and more signs that the market is experiencing a top and a very good chance of a pullback. Let me go into the VIX as well. The VIX has produced a very interesting pattern. What it did is it closed outside of the Bollinger Bands. It doesn't happen a lot, but when it does, it actually produces a very good sell signal in the market, because whenever it closes outside the Bollinger Bands, more than likely it can get a really decent pullback or a bounce in the VIX. It's happened before. Let me kind of show you guys here. It's happened several times in the past where anytime you get a close underneath the Bollinger Bands, the market made a decent snapback. Kind of like here. Let me zoom in. Even though it's a small close, but nonetheless, it produced a very huge rise in the VIX. In addition to that, we had a nice close here, a decent pullback. And also here, when you go further back in January, closed outside the Bollinger and had a huge rise in the VIX, which means a pullback in the market. So again, you just add more clues to tell you what the most likely pattern is for this market. In addition to that, I'm just going to jump into the dollar real fast, since that seems to be in the news currently. The dollar has been pretty beaten up, but you can tell, on Friday it produced a bullish engulfing pattern on high volume on Friday. So that's a very indication the dollar may have hit a bottom, especially when you look at this very oversold stochastic, some pretty major MACD divergence. So you add all of these up together, stacks for a very good case for a bottom in the dollar, since there's somewhat of an inverse relationship between the dollar and the market. Again, that kind of adds to another case for the market top. Okay, so all in all, we'll see. We'll find out soon enough next week whether this is truly a top or not. But again, don't be surprised if the market does continue higher. But I would say I wouldn't be surprised if we do see that pullback pretty soon next week.